All right, welcome back to the Roll with Steve podcast. This is episode 4. I'm excited about this because I've got Jon Olson here with me, the more than just self-proclaimed, the Wall Street Rainmaker. And that was a tagline I saw on your LinkedIn profile, made me want to reach out to you and find out what does that mean and where do we go from here. So I've got you here. I want to kind of read a bit of your bio here. You're the CEO of Milestone Management Services. You've been that for more than 5 years. That's your own company. And then if I go into what your LinkedIn profile says, you are New York Stock Exchange, NASDAQ, OTC markets, expertise there in both strategic advisory, but also investor relations, public relations, management consulting, sales consulting, digital marketing, and media services. So we're going to dig into all of those topics, or at least most of them here today. But our first round here is going to be really about understanding what it is that you do. Because I think the average person thinks about investor relations or sales management or strategic advisory, and they say, what the hell is that, Jon? Like, what do you tell people that you do that makes them actually understand it the first time around?
Yeah. So when it comes to the IR stuff, I don't dive too much into the number side of the game. I'm more trying to help them kind of get their message out there to the shareholders. That's a really big part of it, is that communication. One of the things, for example, we like to use social media because that is a good platform to communicate with not only current shareholders, but potential shareholders. One of the things I do like to do with current shareholders in particular is I like to create shareholder forums on like WhatsApp and Telegram that they can join, where the CEO and other management, including myself, if I'm working with the company, we'll get on there and we're able to answer any questions they have. If a press release comes out, especially if it's a negative one or if it's bad press, you want to have a place where these shareholders can come in and they can vent. Shareholder fatigue is something that some of my clients are seeing with some of their longer term shareholders. They were expecting a quicker turnaround with the company and it just didn't happen.
These are all public companies?
Yeah, a lot of what I work with is public when it comes to the investor relations, or they're private getting ready to IPO.
Interesting. So give me an idea of like revenues or headcount in the companies that is kind of in your black box there.
Yeah, sorry. A lot of the OTC companies I work with don't have revenue, unfortunately. And that's a big distinguishing factor I've seen a lot between the NASDAQ, New York Stock Exchange companies I've worked with and the OTCs. I would say probably 90% of OTC companies are pre-rev.
Interesting.
So it really creates a dynamic for them where they have to take money from what in the industry they refer to as toxic debt. And that's kind of what we see with a lot of these companies, where they get these convertible notes and they're not able to pay the money back and conversions happen.
Let me ask some questions here because I'm a bit of a retail stock trader myself. Yeah. So when you talk about OTC, help me understand exactly like what that means. I can't buy those stocks on Robinhood, can I?
Some you can, some you can't. The biggest differentiation really between NASDAQ and New York Stock Exchange companies and then the OTCs. Some of the OTCs are not SEC reporting, or they're not or they're not audited. Where the New York Stock Exchange companies and the NASDAQ are. So they have far more regulatory requirements on them, but they're also more transparent and they're a lot safer of a bet in a lot of cases. You don't see the pump and dumps on those exchanges where you do on the OTC, and that's kind of where the pitfalls on these OTC companies, Robinhoods and TD Ameritrades and stuff, don't want to take a lot of these stocks on.
Okay. So is most of your role when you're working with an OTC company kind of helping them out with the public relations and getting them seen because people just don't know what these companies are and what they do?
Yeah, I mean, you're basically telling the company's story to the public. I always tell my clients, these companies are like a person, and you're just telling the story for them, and we're telling the story to the public. And that's kind of how you have to look at it, because whether you're using a blog or a podcast or social media, you're talking to that audience, and the message that you put out is out there. I mean, the web is forever for the most part. I mean, and then you have to consider that, good or bad. So that's a big part of it for these companies, is what kind of message they want to put out, and who they want to collaborate with, who they want to work with, and all of that's going to determine who's going to be interested in potentially investing in them.
Yeah, and I want to dig into some storytelling with you in a couple of minutes as well, just to understand what that really means for these companies and how that can apply to small businesses too. I am curious. You dabble in so many different avenues inside of the business consulting world, from investor relations, sales consulting, strategic advisory. What's your favorite to work in, and why?
Wow, that's a great question. It's private companies are tougher to work with. They oftentimes don't have revenue like the OTC companies don't, but they can't give you any shares because they're private. So you'll meet like a lot of these really great private companies. They have great tech, or they have a great IP, or they're just they have a great idea or business model, and it's hard to go and work with them because they don't have any way to pay you. And I've had situations where I've worked with private companies in the past, and I've took equity and it didn't work out, and you pay money to have services done for them. You'll put time into it, and maybe sometimes in some cases your own capital into doing things, and then you end up losing out, and there's no way to kind of recoup your money from it. So that's a challenge with working with the private companies. Now, if you can get to one where the technology is where it's a better mousetrap than what's currently out there, or maybe the technology is so incredible that it just blows away investors and it just has that fast track, that's a little different. It's easier to get behind something like that. For example, I was involved in an oil and gas private company in Canada a couple years back, and I made the biggest mistake, and I'm embarrassed to even admit this. I sold a little early. About 3 or 4 months after I sold my stake in that oil and gas company, they got acquired by a public Canadian company, right? So yeah.
Why did you sell?
And this is the case with a lot of shareholders and or investors in companies. I was losing faith in the management. Transparency was an issue with the CFO, and also I didn't really appreciate the fact that I didn't think that the management was handling the negotiations well with the public company. I was aware that they were reaching out and negotiating with some companies, but I thought that they were kind of selling our assets short. So I kind of was worried that there was, that it wasn't going to go the way it should, and I just kind of bailed out because I didn't think it was going to even honestly get completed, and I was wrong.
Yeah.
And it happens. I've hit on some things, and I've whiffed as well. So
give me an idea of the scale here. You sell for X. How much more was Y if you would have waited till the acquisition?
Yeah, I'm not 100% sure. I mean, I sold it for thousands. It's probably worth at least tens of thousands now,
yeah.
And eventually, if they stay with it, this company, I won't get into too many names. I got NDA on it, but yeah, the company's a good sized company, so it just depends. There's a lot of conditions involved in it for them. So I don't have all the ins and outs because I was already out when they finally did it. But yeah, we'll see how it works out. Like I said,
yeah.
I definitely lost money. I'll say that.
Sure.
I made maybe $5,000, and I'm assuming it's worth probably a lot more than that right now. Probably 20 or so, 30,000.
Okay, no, that's fair enough. I gotta wonder though, with someone of your skill set and background, coming from Wall Street and now in investor relations and helping businesses out with that, you must have like a leg up against the average retail investor in terms of knowing what to look for in a company to invest in. Do you not?
Sure. I mean, I look at a lot of different things. I look at the numbers, like a lot of people do. I look at patterns over 2-year periods, 6-month periods. But one of the things that I go above and beyond, if I'm going to invest in a company or become a shareholder, I call the management and I speak to them. I gauge. I ask them if they have an investor deck. If they do, I ask if they'll send it to me. I ask them questions that I would ask any business I would potentially work with.
Yeah.
And they should be able to answer those.
For any investment amount, you'll talk to the management.
Correct, because I'm not going to put my money into something that is potentially going to lose me money if I can help it.
Yeah.
Because you can learn a lot by talking to the management and gauging where their vision is with the company. You don't necessarily have to agree with every part of their vision for the company long term, but there has to be a long-term play involved, especially with a public company. If you're OTC, you should either be looking to uplist to a major exchange like the New York Stock Exchange or NASDAQ, or you should be looking for a merger or be acquired by a major. That should be the end game for most of these companies. Most companies don't have designs of taking it all the way up to a major exchange and just running a company for decades. That's usually not what they do. It's usually not how it works out. Now, do some do it? There's exceptions to every rule, but that's not generally how it works. So you can kind of gauge, for example, one of the companies I'm working with now, that was one of the major questions I asked him. I said, what's the long-term end game here? Is it to become a New York Stock Exchange or a NASDAQ company and run this and keep the patents? And he said, No, I think what you said was the best route. I think we build it up and we try to license the patents out and then potentially down the road sell the patents. So that's his exit strategy, which I agreed with. And that was what made me say, okay, he's got a really good strategy of how he can execute the end game of this company, which, I have 1.3 million shares in the company. So if the end game works out, it's a good end game for me. So
I love that. So this is, I think, something that's good to point out, because the average retail investor, I don't think, knows that you can just call up the management and say, I'm thinking about making an investment in your company. I want to ask you some questions. Like, what is the long-term play? Like, what's coming next, especially in the penny stock or less than $1 stocks that are out there. What I see more often than not from people who are trying to make investments there is they're hopping onto platforms like StockTwits, Twitter for the stock market, right? Yeah. And they're getting their research done there. They go to Yahoo Finance, do their research there. No one's ever taken the step to pick up the phone and call the CFO, the CEO, and say, hey, what's the play here? Like, I'm going to put $5,000 into your business. Like, and I think it's important to point out too, that I sat down with a hedge fund manager a couple years ago, and he told me that a part of his process before making any investment of any size was having his analysts hop on the phone with management. Yeah. And then before they made an investment, he got on the phone with management too and asked them these questions. People don't know you get access to these CEOs like that. Are there a lot of other things like that people don't know about? And retail side that you know about because you're in the industry?
Yeah, I mean, and that's the funny thing that you said, StockTwits. I mean, I use it periodically. It's one of the least ones I used. Look, it's a good way for shareholders and stock traders to just communicate about shares and different stocks and things like that. But that's not really a be all end all. Yahoo Finance, like you mentioned, great platform for the information. As long as the company's keeping their profile updated on there. Or OTC Markets directly, if they're an OTC Markets company, they're pretty good about keeping it updated. As long as the company's SEC compliant and everything, they usually keep everything up to date on there. And you can look on press releases. If you go on Yahoo Finance or you go on the OTC Markets and you go to news, you could go on press releases and there's always a contact number, a contact email. If it's not the CEO or the COO, there's an IR, usually director of IR or an IR manager, or they hire an outside firm like mine that does the communication on their behalf. And then what we would do is we'd line up with the CEO and we would kind of already have our messaging intact. So we knew what they wanted us to say. So it was in line with the company's message and we would be that voice for them. But yeah, that's essentially, a lot of people, you're right, don't know that you can reach out to people with a company and ask them questions. Now, some stuff is not public. They can't tell you yet. Sure. But a lot of stuff is. And if it's in a press release, it's public. You can't ask them questions.
And you can get a feel of kind of how that conversation's going, the psychology behind like how that person's feeling about the company too.
Yeah, absolutely.
I mean, I know they're professional salespeople, but
competency of the management. If you're calling and you can't get anybody to respond to an email or a call, or you're asking them about their long-term business strategy or how they're going to make revenue and they can't give you anything of substance, or they can't explain to you how they're going to break into this market share that's very competitive and hard to get into, it's kind of a red flag to want to get involved with them at that point. You have to kind of pull back and say, okay, this doesn't seem like this is going to be a solid investment. And if I do invest, I have to be prepared that I'm probably going to take a loss on this somewhere.
Sure.
And
so give me the game on this, because let's say I'm going to make my next investment. I now know I can call with the management and get them on the line. When I do that, what are the top 2 or 3 questions that I should be asking the CEO when I get them on the line?
Yeah, I think you should ask them, are they revenue generating or are they pre-revenue? It's really important to know if the company's making money right now. Even if they're making gross revenue, is there any net revenue? Because a company can make $1 million, but if they're paying out $1,100,000, they're losing $100,000 a year still. There's no net revenue. So if they have net revenue, that's important because that's going to affect how they're able to raise capital, which affects dilution. And if you're a shareholder, dilution affects you. If you have somebody coming in and getting 2 million shares because they have to raise capital with bad money or toxic debt, so to speak, that's going to dilute your shares down and the value of your shares goes down at that point.
And you can just ask them, hey, are you guys going to be raising capital anytime soon? Am I going to get diluted?
Now, that's a trickier situation. So when it comes to raising capital, if it's not already public, they're they're not going to be able to disclose that to you, honestly. That's a compliance thing. SEC, FINRA, they have to be careful. But there is a lot of questions. Revenue is something you can't ask them about. You can ask them about their business model. Do they have intellectual property or any patents on their technologies? That's really important, because if a company doesn't have revenue, but they have intellectual property, that is intrinsically value still. That has some value to it that you can go to investors and say, hey, look, yeah, we don't have revenue, but we do have patents, and there is value here. And you can, and I've had clients that have done this actually, you can have them independently evaluated so that you know what they're worth in the eyes of potential investors, and use that to leverage to be able to raise capital. I mean, ultimately, companies IPO essentially to raise capital. That's why you really want to go public, and visibility as well to a secondary level. But the first primary reason is raising capital. It's so much easier to raise capital as a public company opposed to a private company.
Yeah. Well, and I see a lot of companies too that have gone public that were profitable before they went public. Then they go public, they raise a bunch of capital, and all that growth capital that they have gets put to work, and they become unprofitable. Like, is that a thing? Is that a common thing to see?
Well, you have to understand, when you become public, some of these investors are going to want dividends. Dividends meaning when you make money, they want to get some return back from the company paid back to them, depending on the ownership percentage they have. Other companies want you to acquire more companies. They're going to want you to be working on mergers and acquisitions.
Let me ask you a question about these mergers and acquisitions, because there's companies that I track. And so in my industry, sure, which is e-commerce, there's very few publicly traded companies that sell e-commerce specifically. Mm-hmm. And that's what their market strategy is. So they've raised a bunch of capital now. And when they raised the capital, it was all for the purpose of, our M&A strategy is going to be how we go from a $100 million company to a $1 billion company. Well, the market shifts slightly. They become negative on that strategy, but now they have a bunch of investors who are expecting them to grow massively.
That's great.
And they're not even profitable anymore. It's like the goalpost moves then for them to just grow, not become profitable.
Yeah, that's a great point. You become accountable to the investors. That's a big difference between the private and public level. You have to understand, when somebody puts their money in, they don't just expect to make their money back. They want to make a profit on it, right? And that is the other aspect of it too. That's a big, like I said, that's why most of these private companies do IPO. Because they lose control of at least a part of their company by going public, because they're going to be giving up shares to raise capital. There's more increased regulatory compliance. There's more oversight. You have to be way more transparent about your finances, about your activities as a company. It's more expensive to be public. There's fees for your exchanges. There's auditing fees and all these other things. So yeah, and that's another reason why you'll see the margins of the profit go down, because of the increased expenses that come with hiring people, mergers and acquisitions, like you said, and all these added in regulatory expenses with the filings and all that stuff. So yeah, you hit it right on the head. I agree with you 100% on that.
Yeah, okay. One more question on this, and then we'll move on. Please. But if you're evaluating a company that you want to make an investment in, outside of the top line revenue and looking at their net, what's the one thing I should look at before investing in a company? If we isolate it down to just one thing that's the most important in your opinion.
Yeah, that's a great question. I get that asked to me a lot, because I'm not a broker. So people say, hey, what do you invest in? And I don't give people advice. I say, look, this is what I do. You should be able to go on Yahoo Finance, read some of the last couple, 2-3 press releases, look at the bio about what the company does, pick up the phone and chat with the company. And by the time you do that, maybe even look at the investor deck if you'd like, you should understand what the company does, how they're going to make money, or how they're going to be acquired. And those are the type of things, if you don't get it, if you don't understand how I wouldn't invest in it. If you look at a company and you don't go, I'm interested in this, I like this a lot, if it doesn't make you feel that way, I would suggest don't invest in it. Yeah. Even if people are telling you to. That's my strategy on it. I really think people should do the diligence of researching the companies that they're going to invest in, and then making an educated decision to move forward with it or not. Because ultimately, yeah, you can write some of the losses off as capital gains losses,
Yeah,
but
yeah.
how much do you really want to do that?
Well, it's funny to me because I think what separates the amateurs from the pros in so many different areas, but especially when it comes to investing, is when they do their due diligence. You go on StockTwits, look at the average retail investor, they buy the company first, and then they start figuring out, okay, what does this company do?
Yeah.
They're buying it for the wrong reasons. Let's jump in and talk about storytelling, because so much of what your role is coming into a company is helping them tell a story. What does it mean to storytell for a company that's OTC or that's going to go IPO? What are you specifically trying to do when you're storytelling for them?
Yeah, I think it's really, like I said, I treat these companies like they're a person. They have their own reputation. They have their own story to tell. So what does the product or service do? How is it going to benefit the market? And you have to utilize platforms specifically that are going to help you reach that target audience. If you're putting stuff on Facebook, but the people that are going to use your service don't use Facebook, you're really wasting resources with that, right? So you have to be strategic about it as well. For me in my business, I don't use TikTok. And I know a lot of people are like, really? It just isn't something that I don't see it bringing me any value. Honestly, it hasn't yet.
Probably not a lot of investors on TikTok too.
Yeah,
right now.
it's
more
just
the younger generation.
Yeah, it's just not relevant to my market right now.
Yeah.
Maybe it will be at some point. But right
I am
now,
on TikTok, and we will post this on TikTok too. So
and maybe at some point it will start being relevant for me with what I'm doing. But it hasn't. I haven't seen any returns on it yet. So I kind of drift away. Like LinkedIn has been one of the where we networked on.
Yeah.
It's been a huge platform for me with retail and institutional investors and networking and going to conferences and road shows and meeting these guys and networking with them on there, and then them being able to see my brand and see what I do and saying, okay, he's he's a professional, and being able to feel comfortable wanting to work with me and stuff like that too.
Yeah, I mean, that personal brand is so important to have, and we're going to dig into that. As we think about storytelling, talk to me from the perspective of investors. I mean, in a dynamic marketplace, things are changing every single day. The stock is swaying every single day. Mm-hmm. What is the role of storytelling that you have to help continue to tell the story to investors in a very dynamic marketplace?
Well, that's the differentiation, right? Are you talking to potential customers, or are you talking to shareholders and investors? There's differentiations in it. So if I'm talking to investors, I'm going to want to kind of talk about the business model. You want to show that there's a strong business model. If the management is strong, I want to really highlight that to an investor, and you can do that through other things besides just press releases. I mean, look, investors are not dumb. They get to where they are because they're smart. They can read through if a management team is a strong management team. So that's a big thing they look at, and I think. I don't even think with investors you're storytelling too much. I think it's more for shareholders, honestly. I think investors, with the experience that they have the ability to look at a company and pretty quickly know, looking through numbers, talking to the management, looking through the investor deck, going through what the long-term strategy is, the short-term strategy is for the company, how much money they've raised already, what type of debt they've taken on, whether it's equity or debt deals, capital-wise, and they can make a determination if they think the company is going to, be something that they would want to put their capital behind, no matter what type of investor it is,
And they see so many deals too, which I think is interesting.
Absolutely.
It kind of makes the point that these retail investors probably don't really get a fair shake at it with a number of deals they're evaluating versus the pros. Would you agree with that?
Yeah. I mean, they have more money to work with. They have more analysts to work with. So they're definitely at a huge strategic advantage over them.
So is the retail side worth continuing to do, or is it better to put your money with a money manager who has the access to the analysts and the knowledge that you don't have?
I think that's a great question, and I think that's something that's individualized. Me, I do it myself, but I spend a lot of time doing research and diligence and contacting companies to make sure that what I'm putting my money in works. And look, I'll be the first one to admit I have 3 million shares in a company right now. It doesn't look great, right? But you take chances sometimes on stuff too. And then I have other investments and I'm looking at, and I'm like, okay, these look pretty strong. I think these are going to work out long term. But if you look at the stock market overall, year in and year out, over a 10, 20-year period, the stock market goes up.
Yeah.
So if you stay in long enough, you're going to see gains in the market, whether you're doing it yourself or with a broker or with some kind of a hedge fund, 401k, whatever it is. I always say this, though. If you don't have the knowledge or the desire to try to do the diligence and you're just going to just throw money at companies because you read it on some Twitter page or somebody at work was telling you about this really cool stock that they heard about on TikTok, I'd be careful with that. And I would use a professional at that point, because I would never want to recommend somebody do something and then they're wiped out when they need their retirement money, right? Yes, I mean, it's all relative. I think that's where the differentiation comes. You should do it yourself if you're capable.
Yeah.
And if you don't feel like you can, or you start losing a lot of money, then you should have somebody help you with it. That's my opinion. But
yeah, well, there's a common phrase in the retail market, especially on stock twits, that mother's surgery will have to wait because this investment is not going the way I thought it was going to. And so now I've got a running joke with a lot of my friends who I'm on stock twits with, and it's like, this investment's going to shit. Mother's surgery will have to wait.
Yeah.
It's not going to happen this time around.
That's good.
So let's talk a little bit about these OTC stocks, considered pretty risky for investors, because as you mentioned, a lot of them don't have revenue yet.
True.
And so you are being speculative for those. Differentiate for me the difference between the OTC market and, say, the Russell 2000, the small caps. What's a small cap versus an OTC company?
A lot of it has to do with market cap size. How much liquidity they have as far as how much the stock trades on a daily basis, as well as the market cap. If it's worth 5 million, 10 million, 20 million, they put those together and the stock price, the stock liquidity, and it gives you that kind of equation. Okay. So that's the Russell has a lot more activity than OTC. Other than
what's like the average OTC market cap? Are we talking about like 10 million bucks, something like that?
Yeah, off the top of my head, I don't have the exact stats, so don't quote me. I would probably say I see anywhere from, a lot of them are somewhere between maybe 4 or 5 million, maybe to 10, 15. You don't, a lot of the companies, unless they're inflating themselves early on, they really shouldn't have more than a $15 million, $20 million market cap on the OTCs.
Yeah.
It's when they come in, they can kind of set their numbers, but then, the shareholders are going to kind of adjust it for you at that point. Sure. And investors, they're going to tell you if it's worth that or not, right?
I'm so curious about that because, the market now decides what you're worth once you go into the OTC market. Can anyone just do an OTC offering? Is it the same thing as IPOing, or are there significant differences?
So the initial public offering, the IPO, is essentially going public, and most of the companies do go OTC. I mean, there's some that go to the major exchanges right away. You might have like a Google or a Facebook that's just such an extraordinary tech company that it's going to be the exception to the rule. It's not going to have to go through all the stages. It's going to be able to raise capital quicker, so it's not going to have to take the smaller trek up through the OTCs to uplist like a lot of these other tech companies do.
Okay.
But yeah, it's really depends on the company. I mean, it's very rare Facebook comes in. That's a unicorn type situation.
So the normal trajectory is your private company, you IPO into the OTCs, and then you upsell from there into
uplist until like maybe a NASDAQ or New York Stock Exchange, for example. Those are the two major exchanges. So
gotcha.
Yeah, those.
So you OTC with the intention of always going and uplisting,
or
from there,
or having your technology or patents acquired prior to that. That's also another exit strategy. It really depends on the company, honestly, and what their long-term strategy is. Yeah.
Well, let me ask you about that, because looking at these OTC companies and doing some research around them, if you compare the size of the capital raise from someone who's going to IPO on the New York Stock Exchange at an average of $300 million is being raised, versus the OTC markets where we're talking about $5 million that they're raising there. These OTC companies have a really hard time raising capital. Yeah. Talk to me about that and why that is.
Well, a lot of it has to do with there's a lot of pump and dump pump and dump activity in the past on the OTC markets. Now the SEC's been trying to clean that up. They've been delisting companies.
This is like Wolf of Wall Street type stuff, right?
Yeah.
The pink sheets.
No,
and all
yeah,
that.
absolutely.
That still happens today.
Yeah, and that, but they've been over the last 3-4 years in particular, they've been really delisting companies pretty regularly with some of these regulatory changes that the SEC's been making. Okay. There's been a couple of different things that they've enacted, and they've been kind of cleaning house on some of these companies.
Leave to the SEC to ruin all the fun for all the retail investors.
Yeah,
right?
they're sick of people getting ripped off. The public complained enough. They finally complained to the right people, it looks like. So
yeah. So, but a few guys got rich from those types of strategies, the Jordan Belforts of the world.
Yeah,
and
Jordan.
Everybody else was kind of losing from there.
Yeah, and that's the problem. They don't want one or two people making a bunch of money off the backs of the public.
But there's still a stigma on these OTC pink sheet type stocks now because of that.
Yeah, and it for good reason for some of them. For example, OTC has a few different levels. There's the pink, then there's the QB, then there's the QX.
What would those differentiate? So pink versus QB versus QX?
Sure. So the pink is generally where a lot of the companies come in. It's the cheapest level of the OTC markets. So you don't have to, you don't have to technically on the QB either, but for the most part, most of the pink sheets are not fully SEC reporting, or they're not audited, or both. Okay. QB is where you're starting to get closer to getting up to graduating to the QX. QB, a lot of the companies are at least SEC reporting or audited or both. Okay. And they're starting to make that trek up towards they're getting into the seed capital, early growth stages of their company to raise capital, which is, pretty much after the friends and family round, which is really early on in the stage of investing. These are early stage companies. The QX is the best exchange that the OTC has. So essentially, if you're on the QX, that's a graduation exchange to go to NASDAQ or New York Stock Exchange, because most of the regulatory parts of that exchange are the same as the major exchanges. So it's a preparation for you to build up your liquidity and how much your stock trades daily. There's minimums you have to be trading at like $2 or $4. They constantly are changing it up, but there's a minimum amount your stock has to trade at and a certain amount of liquidity over the period of time that it has to meet to be able to uplist to those major exchanges. But on the QX, all the paperwork, all the documentation, all the regulatory stuff is all the same as the major exchanges. So it really, really helps with being able to uplist to that major exchange, because you pretty much have everything already in place for you as far as all of your SEC reporting, your auditing, and all those type of things are already ready for the next level. So,
is this stuff readily available? If I'm looking at a stock that's OTC on Yahoo Finance, do I know if it's pink sheets, QB, or QX?
I believe on Yahoo Finance, it does say what exchange they're on. And then if you can't find it on there, you can always go to the OTCmarkets.com, and they always list where the company is if they're pink, if they're QB, or if they're QX. Okay. QX being the
What's the best one for an investor who wants to make money, high risk tolerance, to be buying in? Like, which exchange? Is it down at pink sheets, or is that just you're just burning money down there?
Pink sheets are even tough to just trade. I know pink sheets that I've taken, I've had to go through either Glendale or Wilson Davis brokerage. Those are pretty much right now the only companies that are taking a vast majority of the OTC companies, allowing us to deposit them. Yeah. Now there's some exceptions to that. There's some QX companies that you can get, but those are like the top 50 best of OTC QX type companies, right? Sure. Those are companies that'll probably be NASDAQ or New York Stock Exchange in the next year or less.
Gotcha.
And I've seen those companies. I've worked with those companies, and they have everything on track. But
would a company come to you because they're looking to go from the QX OTC exchange and get to the New York Stock Exchange? Is that one of the services of storytelling that we're talking about that you would help provide that avenue for them?
Yeah, exactly. Because part of growing your shareholder base and getting your liquidity up to be able to qualify for the uplist is going to come with doing some marketing. It's going to come with putting out positive press releases, putting a strategy in place to where you're able to get your message out to not just current shareholders, but new shareholders. And then at that point, you're trying to get the current shareholders to become an advocate for the company. You want them to be excited. So they're telling people about the company, potentially getting new shareholders to come on for you as well. And that's something that we really strive to try to do with those guys is get the shareholders excited so they become advocates.
Yeah. What differentiates the normal like Silicon Valley tech startup from these companies that are on the OTC exchanges? Because we talked a little bit earlier about people doing angel rounds while they're on the OTC market. And that blows my mind because I thought, well, they could just sell more stock, right? They're on the OTCs. When we hear about these tech startups, are they on the OTC markets? Or are these different types of companies?
It depends, right? If you have a group of investors in your network that you can go to as a private company and your tech is good enough that they're going to put the money in, you can probably circumvent having to go public right away and go in OTC. If you can raise the capital as a private company and your tech is good enough, maybe you're making revenue as a private company, and you have a intellectual property patent on the tech that you also have. An investor is going to look at that and say, okay, yeah, they're not public, but they have revenue, they have a patent. This is a really solid company. They could eventually IPO, and they wouldn't even have to go through the OTC. So that company might be able to raise tens of millions of dollars in capital as a private company.
Interesting.
And that's kind of like an example, like I said, with the Facebook did. They didn't have to go through the OTC sledge. They were able, as a private company, to raise tens of millions of dollars and then go right to a major exchange.
Yeah. Well, what does it cost a company to go public on the OTC markets on average?
Yeah, I know that the cost is relatively, it changes year to year. I want to say it's somewhere between 10 to 20,000 right now.
Okay, that's a lot less than I would have expected.
Yeah, you got to pay. I mean, and that's not counting the lawyer fees, because you're going to have an auditing firm take care of paperwork, and you're also, I'm just talking, fees for the exchange you're going to be going to. There's going to be fees to do that. You're going to have to pay for auditing, lawyer fees, and all that stuff as well.
Yeah, but nothing stops me from picking one of my companies that does have revenue, and if I decided to take it onto the OTC markets publicly, like, I could do that.
Yeah, you could either get
people don't know that. People have no idea that you can do this.
Yeah, you can either start a new company and you go through the process. Actually getting the vehicle, I want to say buying, I might be underselling the cost, honestly, because I know that like some of these companies that were buying shells that were already created were asking for $200,000, honestly, actually.
Okay.
So I might be short selling it, honestly.
But still $200,000
what its total cost is, but yeah.
If you spend $200 to get access to
millions
the capital markets
capital,
and look, I've got one company I'm involved in right now where I own about 30% of it, and I've got two other members who own about 60% combined who would love to retire. Yeah. The options that I'm aware of today is using some type of 7A vehicle from the Small Business Administration loan to actually buy them out, or partnering with a private equity company to go that route where they're coming in and partnering with me, or a full sale of the business to private equity or to a strategic. But you're telling me that there's this other option out there that I've never heard of before. I could take this company public in theory and buy them out in this IPO if I was raising enough.
Or even give them some stock in the company that's going to be going public, opposed to giving them cash if you wanted to, where they could sell the stock when they wanted to. You could give them preferred shares or just some regular stock in the company is another way. Or you may even do an agreement with them where you give them some shares and some cash with the option to buy out their stock or something. I mean, there's infinite different things.
So interesting.
Reverse merge into a pubco that's already existing that's trying to sell their vehicle.
Is that what a SPAC is? Like these companies that exist on these markets but don't have any access?
That's a whole nother thing.
Okay.
They're essentially just a vehicle that's created to put money into. They look like they're pretty much done right now, though. They were a fad for about a year. Yeah. People were using them. The problem is with any trendy fad like that, they get abused. Yeah. So people were raising hundreds of millions of dollars on SPACs under the guise that they were going to use them to bring companies together into one SPAC vehicle, and a lot of it was just scamming investors.
Well, it's crazy that they didn't even have acquisition targets, and they were raising hundreds of millions to go along with it.
Some of them didn't even have business plans. I had some SPACs come to me, and I asked them what the business plan with the SPAC was. They didn't even have one, and that's how you know it doesn't sound like it's anything. And
that's incredible.
Reputation at that point, you have to say, is making some short-term money worth getting involved with something that could ding up your reputation. And for me, it just never is. I'd rather
absolutely not.
I'd rather keep my reputation intact. So
that's so interesting. So say I wanted to actually pull the trigger on this. I come and talk to you, and you could put a plan together for how we take this company
Well, and introducing you to the right people, right? So it's not just about knowing what I know. I have to acknowledge what I don't know about certain things, right? And then partnering with people on different areas. So like introducing you to the right attorneys that could help you with the legal side of it, which I can't.
Yeah.
Introducing you to the right institutional investors that are going to help you with the IPO, whether it's getting you some seed capital so that you can, like you said, buy out the people that you want to get out of the company, have some money to be able to pay for the fees and the filings to register the public vehicle. And also being able to, if say you reverse merge into a company that's already existing, you don't want to go through the process of creating a whole new public vehicle because it can take 6 to 12 months.
Gotcha.
Sometimes in some cases because it's got to be approved by the SEC and stuff.
Let me ask you on like the structure of this, and we'll make this our last question on this topic. But let's say this business is worth $50 million, zero debt today, but also very illiquid at the same time. Cash flows of maybe 10% of that market cap. If that's the case, how would you advise like structuring that offering on the OTC? If we're just doing back of the napkin math here, are we talking about being able to actually leverage outside debt and OTC capital raise in order to get them paid out at the same time? Like, what would you say to me if that were the case?
Well, if you don't have any debt, that's a huge advantage as far as being a public company because a lot of them do. Because they don't have revenue. Now, do you have revenue?
Yes. Yeah.
I mean, you could leverage the revenue to raise capital because the investors know where they're going to be able to, at minimum, get their money back.
Sure.
Right? So that's important. Yeah, I don't think a company that has revenue and no debt, they should be able to get good terms.
This company does $30 million a year in revenue.
Oh, yeah.
Zero debt. Has a line of credit that never gets used.
You probably would be able to get closer to a Series A round, which is a lot further in the process if you have that kind of revenue to work with. You're going to attract higher quality investors. It's just the fact of the matter, the way it works.
Yeah.
If you the more polished your company is, both revenue wise, debt wise, as far as how your structure is on what your how you take capital. If you can keep that debt structure clean, as a public company, I mean, as a private too, but in particular, we're talking public here. I mean, that makes a huge difference to investors because they don't have to worry about dilution.
Yeah. So
they can give you better terms too. So it's beneficial for you as a company as well.
That's so interesting. Like nobody knows about these OTC markets, and I'm having my mind blown thinking through the possibilities that are here. So let's jump in and talk about sales and personal branding because you have this extensive sales background. When we talked on the phone a couple of weeks ago, you mentioned that even as a kid, you're going around and shoveling snow for people, door-to-door sales. Like, tell me about what that was like as a kid and when you realized, oh, I'm good at this.
Yeah, so I didn't even know initially that I had the talent, honestly. I was 12 years old at the time. My parents had just gotten divorced. My sister and I lived with my dad. My dad was a blue-collar factory worker, so, stringent means. We weren't rich by any means of the equation. And just, money was tight, so didn't have a lot of extra money. And if I wanted like some extra clothes or if I wanted money to go do something with my friends, I had to kind of figure it out myself. And so during the winter time, I would go around and I would shovel, and I wouldn't even ask for money. What I realized was when I'd go to the door and I'd ask, hey, can I shovel your sidewalk for $5 or $10? They tell me no. When I would go up to the door and say, hey, I'll shovel your sidewalk, you can give me what you think the job is worth when I'm done, they would always tell me yes. Now, sometimes I got a handful of pennies, but but I did well. The one thing I really succeeded well was, and when I learned I could actually sell stuff, and I was 12, I was going to the Boys and Girls Club during the summer, and they had this magazine. And in the back of the magazine, there was a little ad. It said, earn $3 for everything that you sell, Olympia Sales Club. And I ripped it out of Boys and Girls Club, I'm sorry. I ripped it out of the back of the catalog and I took it home and I called the 1-800 number and they sent me some catalogs, and then I called them back, or I sent them back, and under my sister's name got another set of catalogs sent, so I had two, so I could leave some. I started realizing that the people wanted me to leave them sometimes, and when I'd leave my catalog and I only had one, I couldn't sell anymore. So that was one of the things I learned. But I would go to the doors at first and I would start pitching them off this little card that they gave me. It was a sales script, about 30 seconds. I timed it out one night, and it was I read it, and it would take me about 30 seconds, 25 seconds to get it out, and they'd slam the door on me within 10-15 seconds of getting into this crap script that they had me do. Yeah. So I sat there one night and I'm like, man, I've been doing this for 4 days. I can't get anybody to even like look at the catalog. I got to try to figure out what I'm doing wrong. So I took their script and I just ripped it up and I said, I know I'm getting about 10 seconds to tell them what I'm doing. So I'm just going to just make it real short and sweet. Hey, my name's John. I'm trying to earn some extra money. Would you mind taking a look at this catalog? and just hand them the catalog.
Yeah.
And I was making $300-$400 a month, lending my dad some money here and there.
Wow. So, I mean, the lessons that you're learning as a kid about offers
Yep.
and how to make the offer that's going to compel someone
Yep.
to actually
Yep.
give you the time of day, getting a chance to understand what a hook is that works as a kid, long before you're writing content for LinkedIn or anywhere else. It's like, if I don't capture your attention, I can't even begin to keep your attention and get you to actually eventually buy. So you found out as a kid that starting with price for snow shoveling wasn't a winning strategy.
Yeah, no.
But offering the service and the benefits, and then there'll be a payment on the back end, but whatever you think is worth, like that. There's a lesson to be learned there, right? What does that mean to people who are looking at pricing items today? Because I'm sure we can glean something from that for businesses too.
Yeah, no, the consumer is going to dictate whether your service is relevant and useful, and then they're going to determine if your price is, right? So if you put the price in their hands, you made the buyer have the power. And anytime you give the buyer the power to buy, they usually go buy.
Yeah.
You know?
Do you think that you did better over time by not giving a set price?
Yeah.
Or worse over time? You did better.
Yeah,
Okay.
because a lot of the people would give me more than I would have asked for. I had people who would give me $20 for doing a small little sidewalk. I probably would ask them for $10.
Yeah.
You know?
Isn't that interesting? Because sometimes we limit ourselves with our own beliefs of what we think the work that we're doing is worth.
Yeah, we do.
Instead of letting the customer decide what it's actually worth to them.
Because it's fear-based, right? So you're hoping that you get the business. You want to go a little lower than you really think it's worth because you're hoping that will encourage them to do it. And in reality, a lot of times it's not, that doesn't really help.
Yeah.
Yeah.
I talked to a guy the other day, I won't mention his name, but the service that he's in, I told him, you could charge $1,000 an hour for this service and it's worth it to companies. And he goes, oh, like that's a lot. I don't know if people would be willing to pay that. It's like, don't undersell yourself. You're worth a lot more than you think you are.
Yeah. And you set your market, right? Like I've done that in the past too. I've sold my services for less than they were worth. And I had to sit down and evaluate after a while. I'm spending a lot of time doing this and I'm not really being compensated for my true value of the time I'm putting into this. And I'm not going to take something on and not give it 100%. So that's something that you have to come to the conclusion in your life. Look, if they don't see the value in what I'm bringing and they're not willing to pay for it, maybe that's a sign that this company's not ready for what I'm trying to do. I mean, you really have to be fair about it too. You don't want to ever I'd rather be overrated than underpaid at this point in my career. So.
Well, it's a crime of new businesses too, who think I need to get customers, I need to get revenue. What they're not thinking about is here's what this should be worth today, because one day I'm gonna have a business that has overhead and employees that are not revenue generating, and I can get away with this today. And they end up starting a business that becomes their job, as opposed to starting a business that they can run one day, that can afford the overhead that they're going to need to be able to stay profitable when that happens. When you start yourself super low, it's hard to go higher.
Yeah,
you can always come down.
Exactly.
Right.
Yeah.
I mean, getting customers.
You can offer a discount.
Yes.
Yes. Yeah, but it's hard to discount a discounted price already.
Yes.
Yeah.
Yeah. At some point, it becomes like unprofitable for you.
Yeah.
To even go from that. Let's talk about sales strategy, because you've been doing sales since you were a kid.
Yeah.
And there are people out there who would say that the tenets of sales have not changed in 40 years. You tell me, is that a true statement? Or is that not?
In some ways not. I think there's still traditional sales strategies. People still do cold calling.
Yeah.
It's a very impersonal way of doing sales, in my opinion. Some content I actually recently put out a couple months ago about that very thing. It's just because it's more of a numbers game. It's not about the quality of the calls that you're doing when you're cold calling in general. A lot of times it's more about the quantity of just making calls, getting people on the phone, pitching as many people as you can, and hoping that a percentage of those are going to convert. I think the newer strategy has changed a little bit. I think people are more, it's more content driven.
Yeah.
And it's more about trying to build that rapport with people, because in particular nowadays, there's so many scams on the internet and over the phone. When you cold call somebody and you're trying to paint a sales picture to them, to sell to them, let's be frankly honest, a lot of times people if they don't recognize the number, they're not going to answer it. as soon as you start trying to sell to them, they're going to hang up on you because they can tell it's a telemarketing call. And you have to overcome those obstacles of building up that rapport with them to where they think you're a professional immediately in talking to them. Also being able to get to a place with them where they're going to feel comfortable on maybe 1 or 2 calls going into their pocket and giving you, in my case, thousands of dollars to work with them when they've never met me before.
Yeah.
Right. And I think that that's really important part of that rapport building. And then also too, the buyer is going to tell you whether your services are worth it, going back to what we were talking about before, because they're not going to, if the services quality is not there or the price is too high, the market will tell you because they're not going to buy your product.
Yeah.
And then as a seller, you have to go back and you have to either improve the quality if that's what it is, or you have to adjust your price if that's the reason why.
Yeah.
So,
well, in the age of digital marketing, going back to the tenets of sales not changing, one thing that I find interesting and maybe some different perspective, cold calling, to your point, is even tougher today than it used to be because people think it might be a scam.
Yeah.
But also there's not a lot of people, especially young people, who are willing to do it anymore.
It's a rejection game.
So in this day and age in digital marketing, it's actually pretty easy to turn on some Facebook ads and talk to people that you've never met before on a video. It's much harder to do that organically on your social media when people are going to see it. Your parents are going to see it. Your friends are going to see it. It's easy to turn on Facebook ads. It's harder to pick up the phone and have a conversation with someone that you know doesn't want to talk to you or hear what you have to say. And so my alternative perspective on this is that if everyone's going towards digital marketing and doing things the easy way and turning on spend, that maybe provides some opportunity for people who are actually willing to pick up the phone and make those cold calls too, even though it's a numbers game. But those old school door-to-door sales techniques that can come through from doing that, is that maybe a better opportunity to win, or at least exploiting the market moved over here? Okay, I'm going to go back and do this a little bit more. What do you think about that?
Well, I mean, I work with some private companies. I've helped some companies recently write their sales scripts and stuff. I think one of the biggest things I try to tell them is you can't call these guys up expecting the sale. It's a big part of it for me is I tell them, I use the term earning their business. I think that's a really important thing. Not going in with expectations. A lot of people already have loyalties and relationships with other people, and all you're trying to do is find a niche where you may be able to earn some of their business as well. So I always think that that's really important, and I think you have to paint a picture for the buyer too. If you just go in and you're just real salesy and you go in that way, that turns a lot of people off. People don't want to be sold to. They want to believe that they're making the decision on their own, and that's how you have to sell to people, and especially cold calling, because again, there is a lot of people calling and scamming, and there is a lot of dishonesty with people who call you over the phone too. They don't necessarily always give you the full details of things when they're trying to sell you because they're trying to make quotas and stuff. So you're dealing with some of those obstacles.
The sales coaching industry now too. You get a bunch of Grant Cardones and Andy Elliott's now who are training people how to overcome every single objection. We just moved into a new neighborhood around the corner from here, and so all the solar salespeople are out knocking on the door. And my wife's trying to come up with a different answer to give people to get just go away the first time. And so she's like, oh, I'm worried about the gamma rays that come down. And people say, oh, well, if that's the case, we've got this product over here. You can't ever get them to just shut up and leave. Part of me appreciates that because I love great sales and I love the sales tactics. The other part's all right, get it the hell on. We're not buying solar. Okay. We don't want what you actually have. But in an environment where you can have all of these expert sales techniques, it's every single conversation now turns into the salesman is just in your face, convincing you that you need this. Or if they ask you a question, you're kind of why are you asking me that? Because I don't want to give you the wrong answer. Like I'm on the stand and the lawyer's interrogating me is kind of what it feels like, because they've planned this stuff out. Some salespeople don't have the same profile. And I'm curious your perspective on this. There's salespeople, the Dwight Schrutes of the world, that are in your face, I'm going to sell you and you're going to buy what I tell you that you need. And then there are other people who do very, very well, who are super passive. I'm going to make you sell yourself to me or make you sell to yourself. What do the best salespeople do, in your opinion?
Well, What you're described is two various types of salesmen who sell to two different types of consumers. I'm more of the in-between of that. I'm going to kind of adjust my sales position like a dance. So if I'm talking to somebody who's going to respond better and relatively quickly, if you've got experience, you can figure out which type of buyer you're dealing with. You're going to dance with them differently. If I got a Dwight Schrute type buyer, I'm going to dance with them in that way. And then if I have somebody who's more like Jim's approach better, and I'm going to dance with them that way because I want to be able to attract both, right? But it's going to be a different type of dance. And that's probably the best analogy I can give on that is when you're doing a sales call, you're basically verbally dancing with that person on the other line. Yeah. And you're hoping that they're dancing back with you,
Do you believe in the fact that the best salespeople are the ones who talk the least when they're on the phone? Like 30% or more of the time, it's the customer talking, not the salesperson talking.
Absolutely. Because if you're not listening, then how can you understand what their needs are? Right? When you initially call them, they're going to, within 10 seconds, judge if you're professional and if they would do business with you. And that's going to tell you how, if there is a need, if they're going to buy from you or not. So I think that's a big part of it.
That first 10 seconds being so important. For anyone who's in sales, who's listening, like what should they be doing in those first 10 seconds to get someone to have the right impression of them or their service?
Well, I think making sure that you're sitting up, right, so that your voice is projecting well, talking in a professional manner is crucial. I mean, introducing yourself, your company. I always, this is Jon Olson with Milestone Management Services. The quick reason why I'm calling, can I speak with, and first name. I don't say Mr. because that sounds like you don't know the person, right? Even if you don't. Yeah. But if I call and say, hey, can I speak with Tim? It sounds like I know Tim. If I say, can I talk to Mr. Martin? Most people don't call Tim if they know him and say, hey, can I talk to Mr. Martin? So it's all relative, right? Like the words that you use, the way that you speak, they're going to judge you and determine, because a lot of times these guys have secretaries or what we call in the industry gatekeepers who are screening calls because these guys are getting calls all day long, all week from people trying to sell to them. And you want to be one of the ones who are calling and you're different. You're not coming off salesy. When they take your call, they can't even tell if they should send it through or not, and they don't want to take a chance, so they just send you through. And that's where you have your most success with it. Honestly.
What are those tactics to get the gatekeeper confused enough that they send you through? Like, what do you like to do on that initial phone call?
Yeah, I mean, I don't ask a lot of questions of the gatekeepers. I'll just say, I hope you're having a good day. I don't say, how are you? That gives them the ability to stop and think more, and it pauses the conversation. Where I'm just saying, hey, I hope you're having a great day. Can I speak with Tim? Yeah. And I go right into it. And they're either going to connect me, or they might, in some cases, they'll say, and I've had this with my sales guys, they'll say, okay, yeah, well, what's the nature of the call? You got to kind of dance from there. But, I think it's all about, like I said, 90% of the time, if you are taking command of that call and you're doing it in a professional way, they're usually going to send you through. Yeah. Majority of the time.
You talk about asking, how are you? And that being a mistake. Yeah. I only ever had one real job in my life, and that was as a sales guy for Orion Talent, a little boutique recruiting firm that helped military veterans as they got out to find jobs that were correlating to what they did in the military. That's one of the things I did wrong a lot, where it was like, hey, Todd, this is Steve Roll. How you doing today? And it's kind of like, well, what do you want, Steve? Why do you care like what I'm doing or how I'm doing? What are the mistakes that most salespeople are making that you recognize when they're making those initial touch points with the customer?
Lack of confidence, overthinking what they need to say, reading too much from the script, not using the script as kind of a guideline and kind of ad-libbing. At the end of the day, sales are just people, and we're just talking and getting to know somebody and build rapport with them. And as you get to rapport building with them, they're going to let their guard down. They're going to start giving you the answers to the questions. If I'm selling you some kind of a marketing service, if you don't trust me, you're not going to answer my questions about anything because you don't know if I'm your competition trying to call you. You don't know who I am from Adam. Yeah. But if I start talking to you and I can show you that I am an expert in what I do and that I'm just trying to see if there's anywhere we can work together, and then I might be able to get you to a point with the conversation where I say, listen, I see you don't really have a social media presence. Do you think that might be something that if you had someone who had the knowledge and the expertise on how to build content for you and how to properly market that content would be something that would help the company as well? Well, yeah, probably. Well, what do you think about me? I'd like to try to help you. Maybe and one of the big things I'll do with a company is say, hey, look, we don't have to do a long-term contract. Why don't we do a 90-day contract? Let me show you some value. If you're happy with the services after 90 days, we can do a renewal. And if you're not, no hard feelings. Shake hands, leave as friends. You gave it a shot, didn't work out. You didn't get into a long-term thing.
Yeah.
And that kind of was where I found a differentiation point from a lot of people early on when I started my company was everybody was trying to get 12-month contracts from these guys.
Okay.
And then they're locked into these contracts, legal binding contracts. There's nothing they can do. They find out this guy's a scammer or he's not really doing anything or his services don't work and he's locked in.
Yeah.
Where if you can show them value over the course of time, they'll usually continue to work with you. I mean, it's hard to find quality people to work with. There's a lot of, I always use this term, there's a lot of viper pits in the OTC area, whether it's service providers or companies for that matter. So there's both. I mean, honestly, on both sides. So
that's super interesting to me. We could talk about sales all day long. I want to shift a little bit and talk about personal branding. Yep. And what it's done with you. Yep. I mean, you've got a sizable amount of followers on LinkedIn that you've picked up, and you make a ton of really quality content, different from what I do. I do a lot of videos and kind of short thoughts. You're writing articles and then sharing like really great knowledge. Look at some of the stuff you put on Instagram of, hey, this is branding, this is marketing. Like, know the difference of those two, where everyone's learning something from that. Talk to me about what the decision to start producing content and building a personal brand has done for you personally.
Yeah, I mean, honestly, I don't try to, first and foremost, anything that I put out content-wise, because I enjoy writing. So that's kind of why I agree with you. I think the video content, though, is very, very helpful with the short attention spans that a lot of people have nowadays in the phones. 15, 20 seconds clips are really useful, right? I love to write, so I like to, use that platform, like you said. But I'm always just writing about stuff that I have experience in, stuff I have expertise in, that I can just share with people. Ways to show my expertise to them, to be able to collaborate with people. Because then they can see kind of where my expertise and knowledge is, and that helps determine if that's something that they would want to discuss with me. But I think it's been very important to create content about things like I've created some AI articles about different stuff about artificial intelligence and chatbots and stuff, because I see the relevancy of where that's going. Same thing with marketing. Same thing with sales, different types of sales articles discussing different types of sales techniques, things of that nature. I think it's super important to share public company articles about different things with investor relations and public companies. One in particular I wrote was about doing a reverse split as a public company. A lot of people don't even know what a reverse split is when a company is going to essentially take two of your shares and turn it into one. So you're losing, if you have two shares, now you have one after the reverse split. A lot of people don't know that. But it's important for people to understand that as a public company, they can do reverses, and that could be something that could affect your share count. You could go from 1 million shares down to 500,000 just in a 2-to-1 split. And people don't realize
that. It's a big deal.
that.
So you're making very useful content for people and sharing that knowledge that's there. Put it in terms of a business. I read a stat for anyone who's out there who's thinking about building a personal brand and making content. For someone who's seen your content or has already read your content, who then has an inbound that hops on a call with you, they've got a 72% higher likelihood of knowing they already want to do business with you and you closing that sale because they've already seen your content. What does that mean to the companies you work with, to those CEOs, to the executives who don't have a personal brand today, but maybe you should start thinking about a personal brand?
Well, and it helps because they can look at my profiles and see he knows from personal experience alone, not just his work experience with other companies, he can do it for himself. Building that brand up has been instrumental in my career. Just building LinkedIn alone, I have almost 12,000 followers, and a lot of that's come from building content, building up my Wall Street Rainmaker personal brand, doing really quality work as a company, and building up my reputation in that regard with the public companies I've helped build up not just revenues, but also either being acquired or helping them with their uplists and things like that. So, yeah, it's imperative for an individual or a business to make sure that their brand represents them and that they're putting out content that they want to have out there that's going to be able to distinguish their brand. And that's, goes back into the written content. It's all part of my brand. I mean, I had a gentleman reach out to me last night he wrote a book about mental health, and he was talking to me about wanting me to help him with his public relations because he's turning it into a movie. Yeah. So, I told him, I said, look, I appreciate you reaching out to me, but the next step would be to get on a call because I need to understand more about what you're doing to see if I can really help you. I don't want to take on something with you and ask you to pay me if I can't bring you any value. Yeah. And then once I learn if I can, then I can, give him an idea of where I can help him.
But he's hitting you up because of your personal brand and coming in. It's like, I already know I want to work with you. Yeah. Like, tell me more. That's one of the things that I found. And the reason I started a personal brand myself was I was becoming a B2B buyer of content I was consuming where I already knew, liked, and trusted a person before I reached out to them. And it wasn't like, hey, come sell to me. It's, I already know I want what you sell. I feel like I know you already too. I've seen you on video. Like, if I ran into you on the street, you wouldn't know me from Adam, but I trust you already. And that's the power of a personal brand. And I wanted that for my companies to be able to do the same thing where someone comes to me, they already know what I'm into, how I can help them, and they want to work with me specifically. This has been phenomenal, John. We've delved into the business side, investor relations, the value bringing to the marketplace, but also unpacking this. What are these OTC markets? And hey, I might be a consumer of using these OTC markets here in the future, but also the breadth of experience you have in sales and on the personal branding side. I think this is very useful content for people to consume and understand the lessons that you've learned in your career and how they can apply those, not just in the big businesses, but also for the small businesses and the 8 million that exist that maybe only have a few employees out there. They can also do storytelling. Yeah, they can also do personal branding. And so I think this has been really super helpful for everyone. And I appreciate you coming in and doing this today.
Yeah, no, I appreciate you having me. I'm glad to help in, whether it's just individual branding or a company's branding.
Fantastic.
We can help them with their sales and their branding and stuff. I hope that some of the content that we made today will do that.
Absolutely. And people can find you on LinkedIn, Jon Olson.
At Wall Street Rainmaker, LinkedIn, and Twitter.
Fantastic. Well. Yep. That's great. Thanks for doing this. I appreciate it.
Appreciate it. Hey, thank you so much.
All right. Yes.